It's Marco here, and today we look at why I sold a big chunk of my portfolio. And yes, there are reasons, so let's dive straight into it. Now, this is the first bit of news. Wall Street banks step up preparations for Fed tapering volatility. Now, if you've been subscribed, you would know everything about the Fed tapering, but if you don't, well, it's basically simple. The Fed has been pumping money into the bond market, and that has caused the equity market, and we're talking about stocks now, to go up. Now, all of that will change, and it seems to be changing very soon. And if we dig deeper into the news, these moves have exposed a still fragile US Treasury market condition. Now, Treasury market is what I just mentioned a second ago. We're talking about bonds. Fragile is a very interesting term that we're gonna have a look at later. But the bit that you need to take away from this article is that there are already victims of this market move. So Rocco's Capital Management and Alpha Dine Asset have already incurred losses, so they've already lost money as a result of wrong way positioning on government bond yields. Now, you think this is small. It's not really, because these are massive companies with a lot of assets at stake. So if they made the wrong call, well, possibly we can do the same. But if we dig deeper into what they basically bet on is the bond yield. So let's dive deeper into this, because this is the reason why I have sold. There are another two reasons, and in this video I'm gonna reveal the reason and possibly why you should sell as well. The reason why these two companies sold, and this is the article, is because they were betting on the difference between short and long-term UK and US government bond yields. So they were thinking this thing will widen, and instead it tightened. But the point here being that even big companies have failed. And as you may know, today the Fed is actually having a big meeting, and tomorrow we are gonna know about what they're gonna decide about the tapering. But what's really important, and this is the first reason why I sold, is because it happened in the past that when they actually came out and gave the news, yes, we are gonna go ahead with the tapering, something massive happened, and it happened in 2013. And yes, that's what happened in 2013. Key events for Fed in 2013, the year of the taper tantrum. And then if we scroll down, all the way down, this is basically a very interesting article, and I'm gonna put it in the description of this video, guys, so that you can have a look for yourself if you feel like it's what you want to know and learn more about this taper tantrum that can happen again. That's the deal. But the bottom line is that in December of 2013, after more than a year of debate, the Fed took its first small step toward unwinding the controversial stimulus. So the point being, after a year of debating, and if you've been following the news and this channel, you know that the Fed has been toying with the idea of unwinding the taper a long time ago. They started actually a few months ago, and they've been discussing it, and this time it really seems the moment they're gonna do it. And when that happens, and you've been telling you this as well, that the whole market will go down, not just a tiny bit. Fast forward to today. 2013 is gone, but today is here, and I sold a part of my portfolio. What did I sell? Well, I sold my Tesla position, and the reason is in the Tesla chart that I'm gonna show you right now. That's the second reason, and then after that there is the third reason. Now let's have a look at this Tesla chart, and let's start from 2020, when we basically had this massive run up, and I was there, I bought even more. So basically after that we had this massive crash down, and if you look at this flag, we see that it was perfect, because it really signaled that once we broke out of it, that was the moment when we started the run up, and now we are up here. Now, what that tells me is that there is a possibility for another 2020 sort of thing to happen again. So, as we had a massive run up over here, we have already had a massive run up over here, and after that we saw this massive drop off, and it seems to be timed perfectly. And so basically what I did was to try to time the market, which is something you should never do as well. But sometimes I do, and I did it on my portfolio today. The reason is that, first of all, I've seen that my portfolio was up 100% on the trade, which is a lot. Like an investment to be up 100% over few months, which is where I started this channel and the portfolio along with it. And so it was a great idea for me to take profit. I still have a lot of money in Tesla. It is still the biggest position I have in my portfolio by far. And listen carefully, the reason why I did it is because I am actually looking for a short-term investment. Yes, that is one of the reasons why you should sell as well if it's what you are looking for. Short term, you need the cash, and so you can potentially sell and come out of the market. It's perfectly fine. The reason and the most important bit is because I am going to probably look to buy a property here in the UK. And I know that there is the possibility for the housing market to crash here in the UK as well, as it seems like it will happen in the US. But the difference here is very important, is that I am paying the rent for my place. So imagine, instead of paying my rent, I would shift that money into pay a mortgage, and I would look to get a fixed term mortgage. That's what I'm hopefully trying to go for. And that way I will be able to, at the end, get a house, as opposed to just paying the rent, hoping and wishing for the future. Now, on top of that, there is another reason, and this I've left for last because it's very unlikely. The third reason why I actually sold part of my investment, and I'm gonna show you in 1 second. So this bit here is very important. While there is obviously the move to end the tapering, so to end the support of the economy, so the reason is that there is already a warning out that the expectations that rapid gains in inflation may prompt the Federal Reserve to more quickly raise the interest rate. So this is the interest rate that will cause obviously the bond market to become more interesting. And so what I'm expecting is both central banks raising interest rates alongside with illiquidity in the bond market trading will actually lead overall in the bond market as a whole becoming very, very interesting for banks, and they will take out their liquidity from the equity market, sell stocks, and move that money into the bond market. So overall, the stock market could come down and that money could flow into treasury and into US treasuries. But don't worry guys, I'm not totally out of the market. I still have the vast majority of my money invested because obviously I'm looking for the long term. What I just wanted is to take profit for a stock like Tesla that has run up so much. So thank you for watching. If you want to stay up to date with this kind of news, subscribe and I'll see you in my next video.